Investing can be a great way to build wealth and achieve your financial goals, but it can also be intimidating if you're just starting out. So in this video, I'll walk you through some of the basics of investing and help you get started on the right foot. Step 1. Set your goals. The first step in investing is to figure out what you want to achieve. Do you want to save for retirement? Do you want to buy a house or start a business? Knowing your goals will help you determine how much you need to invest and what type of investments you should consider. For example, if you are saving for retirement, you'll need to determine how much money you will need to retire comfortably and when you want to retire. Once you've set your goals, you can determine how much you need to save and how much risk you are comfortably taking on. Step 2. Start small. When you're just starting out, it's important to start small. Investing a large sum of money right away can be risky, especially if you're not sure what you're doing. Instead, start with a small amount of money and increase your investments as you become more comfortable with the process. Starting small can help you reduce your risk while you are learning the ropes of investing. Step 3. Educate yourself. Investing can be complicated, so it's important you take the time to educate yourself before you start. There are plenty of resources available online. You might also consider reading books, attending classes, or even taking online courses. All these can help you learn the basics of investing. Some of the key things you'll need to learn about: asset allocation, risk management, and diversification. Asset allocation is the process of dividing your investments among different asset classes, such as stocks, bonds, and cash. This can help you manage your risk and maximize your returns. Risk management is the practice of identifying and analyzing the potential risks to your investments and taking steps to mitigate those risks. This can include diversifying your portfolio or using tools like stop-loss orders. Diversification is the process of spreading your investment across different asset classes, industries, and geographic regions. This can help you manage your risk and potentially increase your returns. Step 4. Choose your investments. Once you've educated yourself on the basics, it's time to choose your investments. There are many different types of investments to choose from, including stocks, bonds, index funds, exchange-traded funds, just to name a few. Each type of investment has its own risks and rewards, so it's important to choose investments that align with your goals and your risk tolerance. Step 5. Monitor your investments. Investing isn't a set-it-and-forget-it activity. It is important to regularly check your investments to make sure they are performing as expected. This means checking in on your investments periodically and making adjustments as needed. This might involve rebalancing your portfolio to ensure you are maintaining your desired asset allocations or selling investments that are underperforming. Step 6. Stay patient. Investing is a long-term game, so it is important to stay patient. Markets will go up and down, but if you invested wisely, have a long-term strategy in place, and a diversified portfolio, you can mitigate market risk and will likely achieve your investment goals. Step 7. Consider the tax implications. No discussion on investing will be complete without discussing the tax angle. It's important to understand the tax implications of your investments. This includes learning about tax-deferred accounts like IRAs and 401ks. You also need to understand how different types of investments are taxed. With this knowledge, you can lower the impact of taxes on your invested assets. So as you can see, investing can be a great way to build wealth and achieve your financial goals. Set your goals, start small, educate yourself, and choose your investments wisely. Then watch your investments and remain patient, and you'll be well on your way to a successful investment strategy. But remember, investing is a journey, not a destination, so be sure to enjoy the ride. Leave a comment telling me what you think about my basics of investing. And if you want to learn more, go ahead, like this video and subscribe to the channel to get the most out of your money. And as always, see you next time.